Good morning and welcome to the Coinbase Institutional Call. My name is Ben Floyd and I will be your host for today. Today I'm joined by George Toropov and Greg Sutton, two senior CES sales traders, David Duong, our head of institutional research, and Sid Shakar, a senior blockchain researcher here over at Coinbase. The call is recorded on Tuesday 13th at 9:30 a.m. Eastern. There's a lot going on today, so please keep this in mind if you're watching later on in the day. To our agenda. We're going to kick off with the macro. We just had a CPI print. David's going to run us through that and what that might mean for crypto. We then run through a market update with George, trading plays with Greg, and also the latest and greatest on DeFi with Sid. Without further ado, let's get into it. David, the CPI print came in this morning. The markets have ripped. What is going on?
Yeah, the inflation print definitely blew expectations out of the water. And it was pretty incredible to see because just last week, we actually got the US PPI print, which doesn't often come ahead of the US CPI, but it actually accelerated. And yet markets kind of shrugged it off because maybe they were expecting that there was going to be better news kind of come in today's print. And the inflation delivered. So, going into it, we were expecting that, the median Bloomberg survey forecast was 7.3% year on year. The Cleveland Fed's nowcast was 7.5%. The print actually came in at 7.1% year on year and 0.1% month on month. So, maybe people won't remember me saying this, but 3 months ago, I actually thought that we would end the year somewhere closer to 7.5%. And that was only assuming that we go back to pre-pandemic inflation levels. So now we're getting this downside surprise in the headline CPI print. And not only that, but even the core CPI looks like it's coming down. So I think that's the real kicker, because if inflation and core CPI can actually sustain that level, that actually gives a lot more credence to the idea that the Fed can actually pivot here. So, the big thing was disinflation in shelter prices. That's been one of the stickier sectors, but also now core goods prices came down as well. So all of this, I think, is hugely important. This is kind of why we're seeing markets rallying this morning.
So David, does this change Jerome Powell's messaging at all tomorrow?
That's a good question. I think a lot now comes down to what the FOMC is going to actually come out with. There's no question about the magnitude of the actual, rate decision. It's clearly going to be 50 basis point hike. I don't think that's going to be a surprise. It's been well telegraphed. The question now is, what is the messaging? What is the signaling that they're actually going to have? We're also going to have a fresh new dot plot coming out. My guess is that, the Wall Street Journal article that came out now about 7 days ago, suggesting that the board members are looking for a terminal rate above 5%. My guess is that that's still probably going to hold. Keep in mind that now that is above, of course, what the market is pricing in this morning. The Fed funds futures curve is pricing in 4.85% by May 2023. I think this doesn't necessarily change the Fed's hawkish tone necessarily. And in fact, that might actually dent some of the current rally.
And what about for crypto assets specifically? BTC is trading up near 18K as we speak. What does this mean for them?
Well, I think, cryptocurrencies in particular, because they weren't part of the rally in November, they really were positioned here to kind of rip higher if inflation came in more benign. And that's exactly what we're seeing right now. But, I've had this kind of view now that even though I think markets as a whole, and this is really across all risk assets, were biased to have a year-end rally, I don't think that the conditions are there to sustain this through the first quarter of 2023.
David, I'm curious, are we getting ahead of ourselves a little bit here? Markets have ripped here, but there's still a lot of things in the background that we need to be concerned about. And we still have the outlook for 2023 with continuing job losses across the US and other things which aren't maybe quite as strong as we had hoped, as well as inflation still being quite high.
Yeah, the questions right now are, how sticky is inflation? Because there's no question, I think, in most people's minds that we've seen the peak of inflation at this point, especially not given today's inflation print. But where's it going to end up? And I don't believe we're going back to 2% in 2023, for example. I'm sure the Fed doesn't either. But is it going to be 3%, 4%, 5%? Best guesses are that it's going to be in the 4 handle. And that's still, of course, not at the Fed's target. And this is why there's a lot of speculation about the Fed actually potentially changing its inflation target from 2% to maybe 3 or 4%. But I think there's still a lot to kind of get this job done. There's also kind of the question of the China reopening, which also could create demand side pressures, which is what exactly the Fed has been trying to mitigate somewhat. So I think this is kind of the issue when it comes to that. The second question, of course, is then what about a recession? Because, of course, the whole time we've been trying to see the Fed engineer this soft landing. I actually don't think that the employment numbers look terribly bad. In fact, if anything, we're seeing that there's still around like 10 million job openings available for people who are looking for it. That's compared to like 4 million back in 2018, for example. So, these are actually pretty strong numbers when it comes to the labor market. Even the buffers that people have in terms of the savings accrued during the pandemic because of stimulus, this kind of actually provides some safety for the economy that we haven't seen in other recessions.
Yeah, interesting to see how that messaging goes when they do try and change the target, or if they try and change the target. I imagine that's probably quite a sensitive one. But moving on to crypto assets, George, what's been going on? What are we seeing on that print and the last week or so?
Yeah, thank you, Ben. Definitely a lot of excitement this morning with this CPI print in the markets. But actually, other than that, it's been relatively quiet markets-wise. But then on the other hand, looking at the headlines, actually, there's been a couple of interesting ones over the last couple of days, especially. But starting out with markets, BTC was really trading in a very tight range, all around $17,000 for most of the week. And then ETH, same thing, sort of $1,250 to $1,300 was the range. Very low vol. And actually, if you look at the term structure of vol, week on week, also pretty little change on that over the last 7 days. So BTC 30-day vol is currently at 55. For ETH, it's at 73. And I think the market was actually getting quite comfortable selling vol here. So the CPI number this morning that we just talked about, and the Fed tomorrow also certainly shaking things up a little bit. So on the back of the CPI print, BTC is last actually approaching 18,000 and ETH approaching $1,350. So up 4 to 5% on the week respectively. And pretty much all of that is coming this morning after the CPI print. That really shows how excited the market is getting about a Fed pivot. But I think, to be honest with you, after these events, so after tomorrow, might actually be a pretty quiet period going into year end, because ultimately most funds have closed their books. In the end, if you're up this year, you're probably not going to be willing to risk that P&L. You're going to be looking to start fresh in January, and same thing vice versa. If you're down this year, and probably again you'll be looking to just keep it quiet or keep it easy and just restart in January. But going over to headlines, there's a couple of interesting ones, as I mentioned. So Grayscale, as one example, is really trying to take the bull by the horn, so to speak, launching a DeFi fund. And personally, I think this is really very much a statement in the current environment. Actually, 2/3 of that fund are uni, so it's probably not particularly exciting, and it's probably a product that some on Twitter were saying that is coming 2 years too late, but still quite interesting in the current environment. Binance is then also an interesting one. Some rumors circulating around solvency there. Reuters actually ran an article a couple of days ago saying that US authorities are thinking to charge Binance and CZ specifically for money laundering and sanctions evasion. And then there was obviously some additional publicity there. So CZ personally suspended an account of someone on crypto Twitter that was critical of Binance, and that all happened in a very public manner. So that was a little bit bizarre to watch as well. And then to add on that, we had Nansen coming out this morning. So they were saying that there were about $1 billion worth of withdrawals from Binance in the last 24 hours. And some rumors on Twitter as well that Jump has apparently withdrawn $146 million from Binance over the last week. But outside of the Binance story, another really big one, and obviously, probably many people are tired of FTX headlines by now, but SBF did get arrested. So there's obviously a lot of speculation. Will he get arrested, or is he somehow protected? There's some conspiracy theories going around, but he did get arrested. And now I guess it's a question of how long is it going to take until he gets extradited to the States?
Yeah, it's an interesting one, that, isn't it? That one is making out to be a great film. But just the headlines we've had out of that this week, whether it's the fact that the owner of the block, or CEO of the block rather, had taken large amounts of capital from FTX in loans and had bought real estate in the Bahamas, whether it's Kevin O'Leary, who has paid a rather healthy fee for being a spokesperson. I think there's going to be a lot of people that have taken money from SBF that are going to be kind of concerned right now. From a protection point of view, Karen Ellison has hired a former SEC crypto regulator as her lawyer to defend her. And then there's a really interesting article around FTX claims apparently trading around 6 to 8 cents. Obviously, we come to the end of the tax year in the US for those that are looking to kind of crystallize that loss and move on. Some of them are taking sort of a 92, 94% discount on any assets they held there. I'm curious, Greg, like where do you think we could potentially kind of go from here?
Yeah, that's a good question. I think it is a positive that we're seeing the wheels of justice move here. It's good for the industry, and hopefully it provides solace to those that were affected. As far as the claims and what those ultimate value may be, I think that's really hard to say. We know from the new CEO of FTX that the place is a mess and it's going to take some time to work out. So I think that's probably another reason why you're seeing them trade at such a low value.
Yeah, that makes sense. And then we were due to have him, at one point he was going to attend the House committee meeting, then he wasn't going to attend, he was going to be in person, and now he's been arrested. One would assume he's not going to attend at all. But David, I'm curious, like, what should we be looking out for at that meeting? Crypto historically has been bipartisan, but can we see any kind of break in that lines, and what should we be looking out for at that hearing later on today?
Yeah, I'm not expecting too many revelations to come out of the hearings today, in particular because so much has already been revealed. We know that this was a case of fraud, for example. That said, your point about the kind of political implications here in terms of the donations, that's kind of valid. We saw that article in Bloomberg that kind of published about this. Around $73 million came from not just Sam, but his allies in terms of donations. That said, of course, $46 million of that was actually going through their own personal super PAC. So, a lot of that money also got spent during the midterms, but there's still now another $27 million that went to other large super PACs. It's a really, hefty chunk of change. I'm not sure if that can actually be recovered, but some of the stuff that actually went into these personal campaigns could actually be clawed back. So it just seems that there are just, so many tentacles kind of going everywhere. I don't know if you guys saw, but the news about the block was also kind of shocking. So it's just so many developments when it comes to this story.
Yeah, it's super sad in many ways, and like my sense is with a lot of those political donations, they would have been spent like on Facebook ads, Google ads, all these things pre-midterms to try and get voters out to vote, etc. So yeah, that feels like a tough one. But then George, just going back to your point around Grayscale launching the DeFi product, I'm actually I think at this time of the cycle, I kind of disagree with some of the detractors on Twitter. I think a DeFi product, something that's higher beta, given the levels we are in the market right now, I feel like that's probably a better time to launch it. I think if you launched that in April 21, top of the market, when everyone's crazy about DeFi, like you would have been killed. Whereas now it feels like a slightly better. And then while if you're focusing on protocols that have actually kind of got revenue, then it feels like that's not bad bones. And Uni's are obviously a decentralized exchange, which has benefited hugely from the FTX fallout. But while we're on Grayscale, Greg, moving across to you, I know GBTC discount is something that you keep an eye on.
Yeah, thanks, Ben. The Grayscale discount is something that we're speaking to a number of clients about. The GBTC discount continues to widen and is now at all-time wides of almost 49%. And that's the risk with these types of trades. With no catalyst, a seemingly wide discount can get even wider. This thing looked great at 25%, looked really, really interesting at 35%. And now here we are at an almost 50% discount. And the reason for that is, we have yet to find a resolution to the DCG predicament. We've gone over it before, but there's really few options available to them, or good options, I should say. One nuclear option is dissolving the trust. Now, as we've mentioned, we don't think this is likely because it just doesn't make economic sense for them. but there is a non-zero chance that it happens. So I think that's why we're seeing the spread trade where it is. Now, that all being said, if you're bullish on Bitcoin, and if you think there's a high probability that DCG finds a path out that isn't dissolving the trust, it could make sense to put on a long position here, because as Bitcoin trades up, you'll participate in that, and then hopefully the spread closes and you actually get some leverage to the upside. Now, on exchange, it's really been the same story that we've had for the last few weeks. Volumes continued to decline. ETH and BTC dominate flows with really no altcoin standouts. On our desk, things have quieted down as well. Flows from traditional hedge funds have been balanced. Crypto native funds are still pretty strong buyers, but those VCs that we spoke so much about in weeks past have really quieted down. And I think that's just the fact that, we're heading into year end and people are closing their books. If you've had a good year, you're not going to risk any of that profit. And, if you've had a poor year, I think you're just starting to look forward to a fresh start in January. But before I go, one last thing that we're having a lot of conversations around is the term structure of implied volatility. We're actually starting to see it tick up from oversold levels that we saw last week. 30-day implied for Bitcoin is now around 55. That's up from 51 last week. We're seeing a similar move in the longer expiries as well. And I think what's going on is, people are finding value in these oversold levels and putting on long vol structures both into year end and into mid 2023. And, very similar to the GBTC trade, if you're constructive on the market, vol being where it is allows you to put on structures, relatively cheap structures that give you leverage to the upside. So I think we're seeing people prepare for what could likely come next year.
Yeah, makes a ton of sense. I mean, at this point, you're acquiring Bitcoin at sub 10K. And as long as you've got a long holding period and maybe you can hold it in your 401k as well, it feels like an interesting trade, which also is one that a lot of retail can get involved with via their Fidelity accounts or whatever else. So yeah, interesting to see how that plays out. Also, ETH is also trading at a similar discount for those that want access to ETH over Bitcoin. But I think the difference there is it's more likely that we see a Bitcoin ETF before an ETH ETF, which is perhaps why that discount remains a little bit larger. David, do you have any kind of thoughts there on the vol side of things? Like, are you having any interesting conversations with clients around that, or GBTC or the other kind of trust-based products?
Yeah, I think vols right now are below the 6-month average, way too low considering what the macro conditions actually look like. Of course, certainly after inflation, people are trying to make the case that Fed pivot is on the horizon, but I just still don't think that's going to be the case. And as a result, I don't think it belongs where it currently is.
Interesting. Well, we'll kind of see how those bull markets reset, and if we do see people bidding up vol into year end for some of those longer dated structures. That's it. Moving on to DeFi Web3, there's been a couple of raises in that space, which is kind of interesting. One is crypto insurance firm Evertas raising 14 million from Polychain, one of the oldest venture capital / hedge funds in the space. Then also Nilon raised 20 million. And I feel like headlines around raises have actually gone a little quiet, and they've probably been slightly more equal with, unfortunately, with FTX is obviously led, but then also like with hacks and other things like that. So that's definitely encouraging. But what else are we seeing in DeFi that we should be keeping an eye on?
Yeah, definitely. I mean, the private markets have definitely taken a little bit of a beating, but the public DeFi markets continue to operate. Smart contracts are decentralized in nature. We've seen quite an uptick in volumes of both DeFi, traditional DEXs, as well as perpetual exchanges like GMX and DYDX in the wake of FTX collapsing. And that trend probably continues to increase. But two things of note for this week was one was a MakerDAO, DeFi protocol MakerDAO, and BlockTower, crypto investment firm BlockTower partnered up for a $220 million vault that will contain real-world assets, which is powered by another protocol called Centrifuge. And this basically will offer another source of collateral for MakerDAO for their DAI stablecoin. So it's still yet to be voted in officially, but this is kind of in the works right now. So kind of a new development in the DeFi ecosystem, which will be interesting because DAI is obviously one of the largest decentralized stablecoins, and adding a different source of collateral, especially other non-crypto assets, will be interesting to see play out. It'll diversify the collateral base and make it potentially a bit more resilient. So that's on the pure DeFi side, and then more on the Web3 side of things. As George mentioned earlier in the call, there's been a significant uptick in outflows from Binance that we've been seeing on chain happen this week, specifically in regards to USDC. So overall, Binance over the past 24 hours, they've seen over $3 billion of net outflows from the exchange across several different currencies. So net outflows is inflows minus outflows. So net, there's been an outflow from Binance, and on chain, we can see that their USDC wallet on Ethereum was running pretty low on funds, and as a result, they partially suspended withdrawals for several users today. And even CZ acknowledged this on Twitter, stating that there was an uptick in USDC withdrawals, and they had a channel to swap from PAX and BUSD to USDC, but that required going through centralized banks in New York, and therefore they had to wait until the banks were going to be opened up before they could process the withdrawals. So it's kind of interesting to note that they were relying on the swap functionality in the first place. They weren't actually holding one-to-one.
Yeah, I guess just one quick thing on that. So it's interesting that I guess it's quite normal for crypto firms to have like a hot and cold wallet infrastructure, whereby you'll keep a certain amount in warm for client withdrawals, and you'll keep the majority in cold, which is more secure. So just to kind of break that down for folks that aren't as aware, for them to drain their hot wallet, which is the kind of the USDC hot wallet that Sid mentioned, in a period where in market stress, when a lot of people are withdrawing, it's not unusual for those wallets to go to zero. That doesn't mean they don't have the capital necessarily. It just means they have it elsewhere in cold storage, which needs to be withdrawn in order to refund that warm wallet so they can progress with withdrawals again. So I'm sure some on Twitter will be kind of spreading fear around that. But I think it's a very normal process within the crypto ecosystem. You wouldn't keep everything in your warm wallet because it's not quite as safe there versus having it in cold. So yeah, I just wanted to jump in and flag that for those that were getting concerned that there might be a run on Binance or anything like that.
Yeah, that's a great point to flag. And they did reveal their proof of reserve addresses, and even on chain, they hold well over $70 billion in crypto assets. So it's not at any immediate risk of overall assets being drained or anything like that. It's just a kind of a momentary shortfall in USDC and a spike in USDC withdrawals that we noticed on chain.
I do agree though, your point around them using intermediary banks in the US, that surprises me because I wouldn't have thought they had that many US banking relationships. So it's interesting that they were using those, and they were kind of reliant on them for their business operations.
Yeah, it is pretty interesting. And he specifically stated that they do the swaps from PAX and BUSD into USDC, and that relied on this kind of banking channel.
And is PAX, are they the ones that are behind the BUSD? Have they helped them put that into, create that?
Yep.
Yeah. So that would probably be the reasoning why the US banks were involved. Perfect. So we're on our final call of the year. It's been a pretty tiring year, I think, for all those in crypto, all those in any markets roles. But as is often the case as we come to the end of the year, let's try and have like a few predictions for 2023. Like, what do we think is going to happen in the market? George, let's kick off with you. What does 2023 hold for crypto?
Yes, actually, I thought the point that Sid was making was quite interesting, with more volumes being traded on decentralized exchanges. And I actually do think that ultimately, trust in centralized institutions has been severely shaken, most severely in the unregulated, perhaps slightly less transparent ones. But I do think that trading volumes for decentralized perps as well as spot, so places such as Uni or DYDX, will grow significantly relative to decentralized exchanges. So if you look at the numbers, I think currently DEX volumes are overall maybe around 10% of SEX volumes. So I would expect this probably to perhaps go up to 15 to 20%. Next year. And then as a side note, actually, if we get more trading on DEXs, that will ultimately mean that there will be more ETH burn. So ETH will become solidly deflationary. So currently, I think if you look at ultrasound, the money, the last 30 days, it was slightly inflationary, so 0.07% inflation on an annualized level. But I think that's really going to help to underpin the bull case for ETH and potentially outperformance of ETH versus BTC. So that's just my two satoshis.
Correct. So George's, it's an increase in usage of decentralized protocols like Uniswap, GMX, DYDX is the first one. And then the second one was
the outperformance of ETH on the back of more usage or higher usage of DeFi protocols compared to BTC.
Perfect. That is okay. We'll look out for that. Greg, your turn.
Yeah, I think we're gonna continue to see implied vol come in, really just because I believe the derivatives market will continue to build out and mature, and we'll see more market participants come in there. So it should be interesting.
Interesting, David.
Yeah, so I guess my market view, no big surprise here. I don't think conditions are actually amenable to recovery in first quarter 2023. I actually think stocks and traditional risk assets actually still look kind of rich. So we'll probably see them repricing on the downward trajectory into early next year. Then I think markets can finally start to stabilize somewhat. And so I don't think crypto markets necessarily will, be disentangled from that. But my crypto prediction, and this is really on the innovation side, I think 2023, we're going to see a lot of new stuff come in with regard to the middleware sector. Just in terms of some of the infrastructure, for example, I think OBOL, Eigenlayer, things like that are going to be really interesting. I think we're going to hear more about restaking.
Nice. And Sid, what are you seeing from DeFi?
Yeah, I would plus one on George's point about increased usage of DeFi and DEXs on chain, especially the more complicated use cases like derivatives exchanges. But also one other trend I see coming in 2023 is genuinely novel applications harnessing ZK proofs, so zero knowledge proofs. The kind of underlying layers, layer twos are kind of going live in production. ZK Sync, Starknet, Aztec, etc. And so they're all just seeking novel applications that actually harness the technology, whether that's around identity or credit or on-chain gaming or other use cases that we haven't thought of. I think some sort of novel application is going to drive adoption, similar to how Compound did in DeFi summer of 2020, taking advantage of smart contract standards being formalized on Ethereum. So we probably see that driving novel adoption of crypto.
Yeah, I agree. We'd love to see that. And my 2 cents are, I think we're going to see investors focus on protocols that have clear revenue streams. So that's just kind of supportive of Sid George's points around the GMXs, the Uniswaps, the Lidos, things like that, where they're producing revenue into the protocol that may be in a DAO right now. And I think that's just as investors focus on things that have traction and are producing revenue. I think from a market perspective, I think we're probably low volume and range bound for the first couple of quarters. But we will start to see some assets that have got models that are easy to understand and are producing some sort of revenue with traction to slightly start outperforming the rest of the market and kind of running their own race to some extent. And I think lastly, I think we're going to start to see people utilizing identity on chain to start providing potentially like loans and under collateralized loans in some way. So I think that's one big gap that we've got with decentralized finance over centralized finance from a financing perspective. And the use of zero knowledge proofs and Aztec and Starks, et cetera, I think could be a great way of doing that. Wow, they are some very interesting predictions there. What we do know for sure, it's going to be another interesting year. Crypto never fails to disappoint. But that's a wrap for 2023. A big thanks to our wonderful production team, Daniel and Graham. They've been fantastic throughout, and also the compliance and legal teams that help us produce this call every single week. And of course, to all of our presenters throughout the year. It's been a real pleasure and joy producing these for you this year, and we hope you've all got some value from them. So a big thank you once again, and that is it.
Happy holidays!
Happy holidays! That's not going to work.
All statements and analysis correspond to the date of this recording. This recording is only intended for sophisticated investors. This recording should not be copied, distributed, published, or reproduced in whole or in part. Neither Coinbase nor any of its affiliates make any representation or warranty as to the accuracy or completeness of the statements or any of the information contained in this recording. The views expressed in this recording are not necessarily those of Coinbase. Coinbase is not providing any financial, legal, accounting, or tax advice or recommendations. The receipt of this recording by any listener is not to be taken as the giving of investment advice by Coinbase to that listener.